Right now, there's so much going on in the economy, and if we don't pay attention to these details I've outlined here, we are going to be sideswiped. I'm going to give you the information about all these different companies, different industries that are doing layoffs right now. I'm going to show you where there is value in the stock market, and then we can take a look a little deeper on what's happening with commodities. I've got a lot to cover. Let's begin. Very first thing I wanted to cover was basically related to stock buybacks as well as the oil and gas industry. Quote, you may have noticed that big oil just reported record profits. Last year, they made $200 billion in the midst of a global energy crisis. It's outrageous. They invested too little of that profit to increase domestic production and keep gas prices down. And they used the record profits to buy back their own stock, rewarding the CEOs and the shareholders. So what they want to do, the government may propose an increase on the stock buybacks to make it more expensive to do that. Hopefully that would kind of push them away from this. Now, stock buybacks are something very interesting because instead of taking their capital that they have, they're making all this revenue, business is booming, right? They could decide what they want to do. They can open up new, if there's a retail location, they could open up new stores, they could hire more employees. In the case of oil and gas, they could do more exploration, they could pull that out of the ground, create more refining, whatever it is that their process is. And yet, what they did, in the case of most of these big companies, they took that and they bought back their own shares. This upsets a lot of people, not the shareholders though. Well, when you invest with that company, you would want to see the best return possible. So you can see how they are trying to balance that out. They could give dividends or they can do stock buybacks. Stock buybacks definitely does boost the price. It is an absolute fact if you look at the data since 2009 that I've shown you here on the channel before, where the companies that have done stock buybacks outperform companies that don't do stock buybacks. It's just the way it goes. That's the data. That's what shows you for investors looking for that information. When you see a stock buyback or see a company that regularly does buybacks, pay attention. Okay, so now they're talking about taxing that. This will have an impact on the oil and gas industry that is already dealing with so much regulation and the thoughts of, we don't want this anymore. The government saying we're going to try to do what we can to tax you into oblivion. So you have to take that into account when you are investing in these companies here, that the government has made it clear that they do not want this to continue. They want renewable energy, solar panels, and wind, and so on. Look at this, big oil's big paradox. Record profits, low stock valuations. And that's basically what the article is about. And I found it interesting to look at this industry right now, here today, that compared to what happened with tech stocks, it looks incredibly attractive. At the same time, we see Goldman Sachs that has said this is the beginning, and this is before anyway, this is the beginning of a global commodities super cycle. We'll see if that's actually the case, but I wanted to highlight that right here and now to show you that when we look at the comparison, tech industry, and looking at commodities, looking at these companies, there's a big difference. Energy looks a lot more attractive comparing the two over a long period of time. Natural gas, fasten your seatbelts. The buffers that keep America's natural gas price fluctuations at bay are eroding. I found this one interesting. You could see, yes, the price is there for certain, but this is what they mentioned. The buffers that historically quelled severe swings are getting thinner, while domestic natural gas consumption rose about 25% between 2011 and 2021, and exports more than tripled. Natural gas storage capacity that ensures adequate supplies in the winter hasn't budged. You've got to realize there's always going to be the supply and demand fundamentals that are at play. And right now with natural gas, this is one we have to watch, because even though they've increased production, storage just isn't there. You need that storage. Just like with Europe right now, what they've been talking about is that they need more now so that they can get that for next winter, but they don't have that because Nord Stream 2 never came online. Nord Stream 1 is damaged, and they're basically saying, Russia's saying we're going to, because of the price cap, they're basically saying we're going to reduce our exports entirely. So this is something that we must understand as a consumer of this. You might be using that gas. At the same time, you've got to pay higher prices for this energy. And then you pay it indirectly when you look at other things that are reliant on that. If you go to the restaurant, that restaurant is using natural gas to heat it and to maybe use that for their stoves and their ovens and so on. They're going to charge a higher price as well. Okay, look here, the fatal flaw of the renewable revolution. This is coming from oilprice.com, so you could see that they have a bias here on this, but they make some good points. Renewables are hailed as a potential solution to the world's energy problem, but it might not be as easy as simply installing more turbines or solar panels. It's incredibly complex, requires a lot of support in order to function, and increasingly complex energy solutions are undoubtedly powerful and promising, but in practice, they often result in more fuel use rather than less. And this is where we have to just come to terms with the fact that we cannot do an energy transition overnight, yet the government is going to pour more and more capital into these things like solar panels and wind and other things. They're going to put the money there, and they're going to put more regulations and make it more difficult for the oil and gas industry. Knowing that, you have to then invest accordingly. Okay? I just want to make that clear. Let's talk about the next aspect. Ford plans, this is I'll show you the layoffs, but I wanted to show this first. Ford plans to build EV battery plant in Michigan with Chinese partner. So this was the interesting part of it. Car maker to create about 2,500 jobs at factory west of Detroit. That's great. Okay, we see that. Great, creating jobs. It's in a place that quite frankly needs more jobs. At the same time, interesting because of the China and US tension. So they're doing this right here. And so they say Virginia withdrew the bid for the site over the US-China tensions. They don't want that to happen there. Instead, it's going on. This is good news for Detroit, good news for jobs. But then I wanted to show you this, talking about Facebook's parent Meta. Not only are they laying off 11,000, more jobs, it appears, are about to be axed. And essentially what they say is we want to get rid of middle management. And a lot of companies will do this, by the way. During the expansionary phases, companies will start to hire people in these really ridiculous jobs. They have roles and titles that aren't real. And then, they're just doing nonsense. And then during tougher times, they start to squeeze that down. Okay, that manager of, I don't even know, I've heard some crazy job titles. But anyway, they basically squeeze those out, or they say, hey, you want a job? We got a job in the mailroom for you. We got a job in, the warehouse for you. No? Okay, walk out. Look at the next one. I'm just going to go through these really, really fast, okay? Disney to lay off 7,000 workers. Yahoo to lay off 20% of the staff. eBay lay off 500 employees. Affirm, this one, by the way, Affirm, fantastic according to all of the influencers on YouTube. Affirm. They keep saying it over and over again. They're cutting 19% of their workforce. JP Morgan cuts hundreds more mortgage workers. GoDaddy said they are reducing the size of our global team by 8%. Boeing is slashing 2,000 white-collar jobs in finance and HR. Layoffs at Idaho's Micron is 10% of the workforce. GitHub is laying off 10% of the staff. And Nomad Health lays off 17% of the workforce. Oh, why not? Let's go again. 1,300 employees from Zoom, Dell 6650. Then you can see since 2013 started, this is incredible, we have seen over 100,000 employees laid off in the tech industry. This is just incredible. Already 100,000. That is a very large number. We are quickly, we're in February. We're in the beginning of February, basically, and we're already at 100,000. This shows us that, hey, that could be significant. But according to the people, They're saying, let it happen. Go ahead, fire me. Some workers welcome losing their jobs. A tight labor market and challenging work culture are giving employees who laid off an unexpected feeling of relief. And if you could see that image for anybody watching this, it's a woman who had basically recognized this period of time after her layoff as an opportunity. She went to Guatemala, had a fantastic time. Now, if you believed that it was only temporary, yes, I'm laid off today, but don't worry because tomorrow I'll be hired back again. Well, then maybe it's not so much of a big deal. You take a couple months off, you go and apply. For a lot of these different positions, we are seeing just so much demand. However, if you are in a particular industry or have a particular job role that it's more likely to be laid off of, that's worrisome. You want to get back in the workforce as soon as possible. For people today, you have to do your networking now. You have to start something even on the side now because you do not know what the future has in store. Suddenly they put some new regulation on the oil and gas industry and the companies just say, okay, we're laying a whole bunch of people off. That's just the way it is. Even though the energy might be needed. You might say, no, we really need this natural gas. But that company is now have to abiding by, this rule or law or regulation. That's it. Jobs are axed. These things happen all the time, so we have to be careful, okay? It could happen in any industry. Right now, tech seems to be the one getting hit the hardest. They expanded the fastest as well. So keep an eye on this. I will show you what's happening today. Layoffs like crazy, and that's the big concern right now at a time in which we are seeing major fluctuations in the economy. If you want to know all of that data, all that important stuff, you check out this channel every day. I'll bring you the latest and greatest, okay? So just hit that subscribe button and you have to make sure that you come back to the channel, type in the Money GPS, and that's the only way likely you will see the videos. They don't end up in suggestions. So I would highly recommend just type in the Money GPS. Every day you come back, you'll get the latest and greatest. I'll see you tomorrow. Take care.